Right, lads and ladies, we're back. We're back again, and today is more um, important. Pips. It's very important that you understand pips and how price moves, because at the end of the day, a pip determines how much you make or how much you lose on a trade. So, what is a pip? Straight into it. PIP stands for percentage point. It's the smallest price movement in the foreign exchange market. It's a unit of measurement used to express the change in the value of a currency pair. In simple terms, it's the smallest increment of change that a currency pair can make. Now, technically, the smallest increment change is called a pipette, which is 1/10 of a pips. There's 10 pipettes in a pip. If we don't look at those, they're too small, and you can't trade them. You can only trade a pip at a time. But just important to know that technically a pip is the smallest unit, but you can't trade it, so we look at pip. In the foreign exchange markets, important in the foreign exchange markets, the pip is usually the fourth decimal place. And now for the people who haven't finished school and they don't know how to move a decimal point, if it's the fourth decimal place, it's usually more than likely always going to be the fifth digit from the left. It's easier because you'll have pairs like you can see now in a minute, JPY, whereas it's not 1 point something something, it might be 100 point something something. So €1 is equal to 100 yen, not €1 is equal to like $1. Do you know what I mean? So if you just think of four decimal places, it's just when you think about moving the decimal place, you start to overthink it. Is that the right place? Is that the wrong place? Look, if you get stuck, Google it. That's what Google is there for. Google it, look it up, understand it. But rule of thumb is 50 GM from the left. That's going to be your pip. Bang, 50 GM from the left, and then when you have a Euro or USD JPY pair, it's still the fifth digit. But if you were thinking, oh, I have to move this decimal place, but is it here? So do I move it 4 places from here, or is it 1, 2 already in the third? So they would just move it over to 1, or just gets complicated. And a lot of people, well, I know I did anyway, was just overthink it, think about it too much, and it's not that difficult really to understand. Yeah, so 50 GM from the left. This chart is just a good visual to understand it. Here's an even better one to understand it. If you want to have a look at that, I'd highly recommend taking notes on this, or just look through the video and taking notes afterwards. I'll leave the link for the course down below, free of charge, of course. Now let's look at pips, because pips are slightly different when you look at pairs like gold. Here, don't be acting the bollocks. Here we have a gold chart, right? So when we look at this gold chart, we have the price displayed for gold. So we know from a previous video that we're trading 1 ounce of gold is equal to this digit that's displayed right here, $5,026.10. So if we go in 5 digits from the left, 1, 2, 3, 4, 5, there's your pip. Excuse me. Man, and 5 digits from the left, this one here, this is your pip. So, well, it's a 9 now, but see how quick it moves. So we don't look, and then the 3 is going to be your pipette. 3 is going to be your pipette, or the last digit is going to be your pipette, but like that, it moves too quick, we don't trade it. 5 digits down from the left is going to be your pip. Beautiful. But gold is slightly different, because gold moves so volatile, so quick, so fast, that you won't even be able to look at this pip and get a price on it, get an entry on it. So we look at the digit to the left of the pip. So if this is a singular pip, well then this pip here, that must be 10 pips. Simple maths. If this is your thousands column, you're taught in primary school, if this is your thousands column, this is going to be your hundreds, this is going to be your tenths. Oh, sorry, this is going to be your tens of thousands, this is going to be your thousands, this is going to be your hundreds, and this is going to be your tenths. So any movement, this 9 goes to a 10, or a 0, you know it's either going up 10 pips. If this 3 here goes to a 4, you know it's either going up 100 pips. If this 0 goes to a 1, you know it's either going up 1,000 pips. And then 5,000 to 6, that's going to be 10,000 pips. So let's just take a look now and give you an example. That feed is going to be full, isn't it? Yeah. Use this. Get it cleared out the feed now. Fine. And then here as well, just like around 2 minutes ago. There's your easy layout like that. It's simple. It's just what you learned in primary school. Don't think about it too much. If you're confused about it, just Google it or look at the course. But you should be able to understand it fairly easily. Why can't I get it clear? Fine, Vantage, never use Vantage. Wait, beautiful. Wait. Now, let's say for example, we take this tool here. This is your range tool. Say you want to go from this low to the high that price is currently trading at, right? This is 379 pips. Now, I need you to add a zero. Whenever we're looking at this, you'll have, it's a bit tricky with gold. You'll have 300 and then you'll miss the 3,000. It won't be there. It will show a percentage and then it will show you 10 times that again. So you have your 300 here. This represents, because we're looking at tens, we're not looking at a single pip. We're looking at the 10 movement. So you're going to add a zero. So there's your 3,790 pip move. Massive, massive, massive move on gold. Like that, then when we get into lot sizes now in the next video, you're going to understand why a pip is so important and what it actually represents in monetary terms, in dollar terms in your account, how much dollars or euro or whatever it is you stand to lose or gain on a trade. So if 379 is 3,000 pips, but then if we go, I'm gonna have to go back now a while to get just a good handy. Gold never moved the way it did. Said it before, it was at 1900 or something when I started trading. Mental. Go from the bottom of this candle to the top of this candle, 46. So we know you're just going to add a zero. There's a 460 pip move. Nice and easy, nice and clean. Now, when we get to, say, Euro USD, we can make this data feed work. Spending too much time jumping between them. From here to here, 56 pips. It's way easier. You don't have to think about any adding zeros or any multiplying by 10 or anything like that. Pops up. That's a 56 pip move. So if we'll get into it in the next video, a lot size, and depending on your lot size, that 56 pip move could be worth €5.60 at a 0.01. It could be worth 56 at a 0.1 or 560 at a 1.0 lot size, or then you can up it again. You can go 5,600 for that same movement. That's why it's important to understand how to read the pips and know the price movements, because if you don't, you're not going to be able to understand what it means in monetary terms for your account. If you look at silver, silver is the fourth. It doesn't follow the fifth rule. Silver follows the fourth, so it's not 8, it's not the 1, it's not the 7, but it's the middle. It's the fourth digit to the left on silver. And same with copper, fifth digit from the left. Anything else? When we're talking about points, whoa. When we're talking about indexes, bang, like the Nasdaq or the S&P, we're talking about points that are measured differently. Don't think about it too much. Stick to what you know. But when you look at the S&P and you're looking at cryptos, it's an easier way. Instead of using pips for crypto, use points. It's just a million times easier, because $1 increment, if this goes from 6,945 to 6,946, that's a 1 point movement. So 1 point is just your single unit. It's just a million times easier to understand. There's no decimals, there's no movement, there's no fifth digit from the left. It's just going to be like, if you look at Nasdaq, 25,115. That 15 goes to 16 or 17. There's 2 pips movement there. Do you know what I mean? Oh, sorry, there's 2 points movement there. Sorry, excuse me. Same with Bitcoin and crypto. It's just easier to just think of it as a point movement instead of a pip movement. When you think about pips, keep it to commodities and currencies. When you're thinking about futures or indexes or cryptos, just look at it as points. Makes everything just a million times easier. I find it easier anyway. So now, have you missed? That chart pretty much runs through everything. If you want a better understanding, you can look at that one there. And like I said, don't just listen to the videos. Don't just watch these videos and just leave it at that. I watched the video. I know what pips are. Study it, man. write it down, sit down, put in the time, dedicate the time of your day, 20 minutes a day, 10 minutes a day, 5 minutes a day, whatever you can spare, where it's not going to feel like you're forcing it. Do you know what I mean? And get the work done. Don't just watch the videos. Get the course content done. It's free. You may as well use it to your advantage. The reason I have the course content out for free and the YouTube videos for free, so you can match the piece of course content with the video. I'm going to give you a short explanation, pull them out together, and do your thing, and hopefully get a better understanding. Now the next video is lot sizes. Leads straight into lot sizes. We'll go straight into it. So we leave it there for PIPs, and we'll get on to lot sizes. They go hand in hand, so they're very important to understand both of them. If you don't understand any of them, reach out, ask the question. If you don't ask the question, somebody else probably has the same question and they don't want to ask it. Do you know what I mean? Whereas if you ask, you get an answer. The worst thing anybody can say to you in life ever is no. Do you know what I mean? Just answer the question, like, just ask the question. Excuse me. I'll see you in the next video, which is lot sizes.